Hey guys, my name is Nicolette Mashile, also known as the Financial Bunny. So what is a payment holiday and when should you consider taking one up? My friends and I joke and talk about the payment holiday is not a holiday of interest. And basically what it means is that remember that while you are going to be taking a holiday in terms of making your repayments every single month for the next 3 months, you are still going to be charged interest and account fees, and those amounts are going to be capitalized and added into your outstanding balance. That's basically what it means when they say you are taking a payment holiday. Now remember that this payment holiday is not something that came with COVID-19. It's nothing new. It's always been there, and the banks have always made it available to consumers who are feeling a little bit financially distressed, and they can apply for a payment holiday. And usually what the banks did then is that they assessed it on case for case, and they would grant you the payment holiday if they felt that you could take one up. So what has now happened is that because of COVID-19, because there is a national disaster that has been declared in the country, there's a realization from the banks that some of its clients might not be able to pay their repayments. And instead of letting them get into arrears and get themselves into financial trouble, they are offering this payment holiday for every single one, and you can actually opt out of it or opt into it if you really need it. And I say this if you really need it because this is probably the most operative part of this entire thing. Only use a payment holiday if you need it. Because ultimately, as I said, a payment holiday is going to be paid for at some point or another. So when the banks talk about capitalizing the interest that they are charging you over the 3 months, what they essentially are saying is that the amounts that you're going to be charged for interest are going to be added on into the capital or outstanding amount that you still owe the bank. So when they calculate your interest charge after the actual 3 months, you are going to be charged a little bit higher because your outstanding balance will probably be higher. And this could essentially happen right after the Reserve Bank increases interest rates again. So you need to be very careful and actually watch out for that because that could potentially happen. The other plan that has been put on the table, and I know FNB has put it on the table, is what's called a cash relief plan. And basically what they're saying is, because on a payment holiday, when they capitalize and recalculate the amount that you're going to repay on your loan, it will be based on the initial credit agreement that you had signed on that specific loan. But if you take a cash payment plan, it means that they're essentially kind of taking out another loan for you on the side, but it will have its own terms and conditions. So you are taking out essentially a loan to be able to repay the 3 months, right? Now, the other alternative is that if you have taken up a loan after August 2017, you might be able to tap into what is called credit life insurance. And basically credit life insurance, what it is that it's an insurance cover for when you are unable to make an income. So it is geared at salaried individuals, but it's for when they are unable to make an income. Now we are finding ourselves in a very unique situation right now with this COVID-19 and the lockdown regulations that some people might, one, lose their jobs and will not be able to derive an income and therefore will be retrenched. There is a retrenchment benefit in some of the credit life insurance policies that you could have taken when you were taking your actual debt. And remember, the National Credit Regulator has made it compulsory that every single credit line that was taken post 2017 August needs to have the credit life insurance attached to it. So please do speak to your bank and find out what are your alternatives before you make a decision to take a payment holiday, to take the cash plan, the cash relief plan, or to use your credit insurance. And remember that the credit insurance will pay for when you are not paid. So these would be people that are not necessarily taking unpaid leave, because when you take unpaid leave, essentially you are not working and you are at home sitting. So you are not putting in the means to derive an income. But when you get retrenched, it means that you are unable forcefully to now not derive an income. Or when you are told that the company will not be able to pay salaries, it also again is an indicator that you don't have a choice in the matter. You cannot derive an income even though you would like to derive your income. So very important for you to go and speak to your bank and find out which options are available to you, because at the end of the day, We all need to secure our financial futures, and our financial futures are going to be the result of the decisions that we make today. So make the right financial decisions.